JSW Steel reported its Q4 numbers, surpassing ET Now's estimates, and the revenue has crossed the 42,000 crore mark, but PAT has reduced to around 1,300 crore rupees compared to the previous quarter. In fact, the board has also announced a dividend of 7.3 rupees per share. The company has also guided for 25,000 crore rupees in capex for the current fiscal. And my colleague Ashesha now joining in with more details as far as the earnings fine print is concerned. Ashesha, take it away and tell us the top highlights.
Well, yes, JSW Steel has reported better than expected set of numbers. Revenue, EBITDA and margins have come in ahead of street estimates. Standalone EBITDA per ton has declined by nearly 30% on a sequential basis, largely in line with what the street was working with. And decline in standalone EBITDA per ton is on account of lower steel prices during the quarter, which resulted in lower realizations. And coking coal and iron ore prices were also on the higher side because of its lagged impact on financials, and that impacted spreads in the fourth quarter. Now for FY25, they've given sales guidance of 27 million tons, which implies about 8% growth over FY24, and production guidance of about 28.4 million tons, which implies 6.5% growth over FY24. Debt has declined by about 7% on a sequential basis. Capex guidance for FY24, the company has not been able to meet. They had reduced their capex guidance to 18,000 crores for the full year. They've achieved capex of 16,700 crores for FY24, and now for FY25, they've given capex guidance of 20,000 crores. So all in all, numbers have been better than estimate. 20,000 crores is the capex guidance for FY25. Spreads have been on the lower side, but largely in line with what the street was working with. And FY25 sales guidance implies volume growth of about 8% for FY25.
Well, that's a fine print of JSW Steel for Q4. And moving on now to an ET Now exclusive.
If you like this video, then like, share and subscribe to ET Now.